Hello students, welcome to financial accounting class. In the previous class, we have solved one problem wherein we need to calculate the value of consignment stock, value of closing stock. In today's class, we are dealing with yet another problem where we need to calculate the amount of abnormal loss from the given information. So what is the information that has been given? Goods sent on consignment, 100 cases of medicine at rupees 500 per case. Second, cases damaged during transit is 20, damaged, estimated to realize rupees 7,500. Expenses on consignment, consignor rupees 2,000 and consignee rupees 1,000. So this is the question that has been given, and from this you need to calculate the abnormal loss. Now, what is it being said that 100 cases were being sent at rupees 500 per case. So the total cost of goods sent is going to be 1000 into rupees 5000, 100 into rupees 500 per case. Cases damaged during transit, so it is 20. So 100 minus 20, that is because only 80 cases were being sold. Okay, 100 out of 100, 20 were being damaged, so 20 were unsold. Expenses incurred by consignor, this is nothing but non-recurring expenses incurred by the consignor, that is 200, 2000 and 1000. So let's calculate abnormal loss. Now to calculate the closing stock, these are the 5 ways. Okay, and where do we, here we have when there is no loss, when there is abnormal loss, when there is abnormal loss of goods in the premises of consignee, and so on. So there are 5 ways. So we are landing in this question, it is abnormal loss due to loss of goods in transit. So what is the formula for it? Abnormal loss of goods in transit is unsold goods into cost price per unit and so on. Let's put this in the solution. Consignment stock is equal to unsold units into cost price per unit plus non-recurring expenses by both consignor as well as consignee divided by total units sent into unsold units. Okay, so unsold units is how much? 20. Why? Because they were being damaged. So unsold units is 20 multiplied by cost price per unit is 500 plus non-recurring expenses by both. Here expenses incurred by consignor is given as 2000 and consignee is 1000. So 2000 plus 1000, close the bracket, divided by total units sent is 100. Multiply by unsold units is 20. Let's simplify this. 20 into 500 will give you 10,000 plus 2000 plus 1000 divided by 100, that is 2000 plus 1000 is nothing but 3000 divided by 100 is nothing but 30. Multiply by 20 will give you 600, that is 30 into 20 will give you 600. 10,000 plus 600 is nothing but 10,600. This is the abnormal loss that is incurred. But what they have said here is cases damaged during transit is 20, estimated to realize rupees 7,500. So whatever they have made loss on these 20 units, out of that 7,500 they are able to recover. So let's put that in the solution again. What is the actual abnormal loss that they are incurring? Total abnormal losses 10,600. 10,600 minus recoverable amount is how much? 7,500. So 10,600 minus 7,500. This is the actual abnormal loss that they are incurring, which is of 3,100. Understood? That is 10,600 is the abnormal loss. Okay, minus that they are recovering how much? 7,500. 10,600 minus 7,500 will give you 3,100. This is the actual abnormal loss that they are making. Okay, I hope you have understood this problem. Let's look into the next question. Now this is a little tricky question. All of you pay attention. Ascertain abnormal loss and value of closing stock from the following information. Okay, we need to calculate again abnormal loss like the way we calculated in the previous problem. Same way we need to calculate the abnormal loss and value of closing stock from the information. This question is combination of both the questions what we have studied previously. We need to calculate abnormal loss and value of closing stock. Abnormal loss is the second question that we calculated, and value of closing stock was the first question that we calculated. So this question is combination of question A and question question number 1 and question number 2. All right, let's look into what is given here. Oil supplied on consignment 6000 kgs at rupees 90 per kg. Packing and forwarding charges by consignor rupees 30,000. Oil stolen in transit 100 kg. Oil sold by consignee 4500 kgs at rupees 25 per kg. Loss of oil due to evaporation during the transit is 5%. Now with this information we need to calculate the abnormal loss and value of closing stock from the information. Now this is the oil supplied on consignment. This is the actual consignment, that is the total cost of goods sent, 6000 into rupees 90. Next, packing and forwarding charges. This is nothing but the non-recurring expenses which are incurred by the consignor. Oil stolen in transit. This is nothing but abnormal loss. Okay, because the goods are stolen, it is nothing but abnormal loss. Oil sold by consignee. This is nothing but the sales being done by the consignee. Loss of oil due to evaporation during storing is 5%. So this is nothing but loss of evaporation due to storage. That is nothing but abnormal loss. Abnormal losses because of stolen, goods which have been stolen, and evaporation is nothing but normal loss. So let's calculate abnormal loss. Abnormal loss is equal to consignment stock is equal, that is I had just now told you in the previous question. This is how we calculate the abnormal loss. Okay, so put that formula. Consignment stock is equal to unsold units into cost price per unit plus non-recurring expenses by both consignor as well as consignee divided by total units sent into unsold units. Now how much is the unsold units? Unsold units is 1000. Why they were unsold? Because they were being stolen. Okay, 6000 was the total consignment. Out of that 1000 were stolen and 4500 were sold by the consignee. So how much is the unsold? From 6000, 1500 were being sold and 1500 is 4500 were being sold and 1000 is the unsold units. Okay, remaining balance was evaporation, 5% abnormal loss. So how much is the unsold units? Unsold unit is 1000. 1000 multiplied by cost price per unit is 90. Here it is 6000 kgs at rupees 90 per kg. So per kg cost is how much? 90. Cost price per unit is 90 plus non-recurring expenses by both. Non-recurring expenses by consignor is given here, which is 600. So put it in the bracket as 600 divided by total units sent is 6000 multiply by unsold unit is 1000. Why unsold unit? Because it was being stolen. Okay, so multiply by 1000. Let's simplify this. 1000 into rupees 90, which is 90,000. Okay, plus 30,000 divided by 6,000 will give you 5 rupees. Multiply by 1000 units. 90,000 plus, or let's make it like this, 5 into rupees 1000 will give you 5000. 90,000 plus 5000 is nothing but 95,000. This is nothing but the abnormal loss which has been incurred. All right, let's calculate the second half of the question, that is value of closing stock. Okay, now to calculate value of closing stock we need to check the formula. What is the formula? Let's look into the previous one here. Now, when we are calculating closing stock, in this question there are two things. One is normal as well as abnormal loss of goods. So these four we cannot use because it is individual. Okay, but the next part is where we have normal as well as abnormal loss of goods. So if there is normal as well as abnormal loss of goods, what is the formula? The formula says consignment stock is equal to total cost of goods sent plus non-recurring expenses by both minus abnormal loss divided by total units sent minus abnormal loss in units minus normal loss in units into unsold units. So let's put this in the formula. Okay, the whole formula will be repeated. Total cost of goods sent plus non-recurring expenses by both and so on. All right. Now let's simplify the formula. Total cost of goods sent. Total cost of goods sent is, how do we get this total cost of goods sent? Here it is. Oil supplied on consignment is 6,000 units into rupees 90 per unit. So 6,000 into rupees 90 will give you 5,40,000. Okay, 5,40,000 plus non-recurring expenses by consigner as well as consignee. Here only consigner's expenses are being given which was incurred in terms of packing and forwarding. So here it is given packing and forwarding expenses are 30,000. So 30,000 minus abnormal loss which we have just now calculated, that is 95,000. So put that 95,000, okay, divided by total units sent. Total units sent was 6,000, okay, minus abnormal loss in units. How much is the abnormal loss in units? It is 1,000, which was being stolen by stolen in transit. So 1,000 minus normal loss in units. Now all of you pay attention. Normal loss in units is nothing but we need to calculate this. And how do we calculate this? See, normal losses 6,000 units which were being sold. I'm sorry, 6,000 units, 6,000 kgs was the consignment. 6,000 minus 1,000 which was being stolen. So 6,000 minus 1,000 will give you 5,000. On this 5,000 you will give 5% which is normal loss. So 5,000 into 5% will give you 250. Okay, multiplied by unsold units. Now unsold units, we need to calculate this unsold units. How do we calculate this unsold units? Here it is. That is 6,000 units which were being consigned. So 6,000 minus unsold units were 1,000 because they were stolen. So 6,000 minus 1,000 will give you 5,000. On this 5,000, if you give 5%, okay, which will be 250. So 5,000 minus 5% will give you how much? 4,750 minus 5,500 which were being sold. These were the goods which were being sold, which will give you 250. I make a repeat of how did we calculate unsold goods. Okay, unsold goods is equal to, we need to calculate this unsold goods, that is multiplied by unsold goods which is 250. How did we get this 250? That is 6,000 which was the consignment oil supplied on consignment. So 6,000 minus 1,000 which were goods being stolen. So 6,000 minus 1,000 will give you 5,000. This was the balance with the consignee. Okay, on this consignee will have to incur 5% abnormal loss. So on 5,000 if you give 5%, it will be 250. So directly put it onto your calculator as 5,000 minus 5% will give you 4,750. 4,750 is the actual loss that they make. But out of these 4,750, they have already sold 4,500 goods. So 4,750 minus 4,500, this is nothing but 250, which is unsold goods. Okay, so here is the unsold goods, which is 250. Let's simplify it. 5,40,000 plus 30,000 minus 95,000 will give 4,75,000, divided by 6,000 minus 1,000 is nothing but 5,000, minus 250 is nothing but 4,750, multiplied by 250, which is unsold goods. Total of this, that is 4,75,000 minus 2 divided by 7,000, sorry, 4,75,000 divided by 4,750 multiplied by 250 will give you 25,000. Okay, I hope you have understood how did we calculate the closing stock. Okay, don't write what is being written in red ink. This is just for your information. Okay, this information what has been written in the red ink, do not write it, because this is just for your information, just to make you people understand. I have written it in the red ink. The entire problem, do solve it, but do not write this. This is just for your information. Okay, I hope you have understood today's class. Let's meet up in the next tutorial. Thank you.